or defer your weekend warrior events to do this. I will promise you today, I tend to go long sometimes, but I have something I have to be a part of today. So I know sometimes I rib you in the beginning space. It's going to be a short one, 4 hours. We will be very long with this one today. Okay, it'll be under 45 minutes or so. I want to kind of like draw a contrast between two concepts that many times gets confused either by my presentation, which I'll admit sometimes I'm not always the best in terms of articulating when I'm ranting. I'm just basically going where I'm feeling led by at that moment. And today, I kind of like a little bit more focused because I want to draw a very stark separation between daily bias in the marketplace and narrative. And I want to open it up with initially stating that the bias on a market is absolutely not a narrative. Okay, and I've had over the years students come in and say, hey, look, it's the most important thing. What should I focus on initially? Like, what's the first thing? But inside of a long-term macro bearish market, and I can trade profitably doing that. So many of you are so rushed to try to get into something, you're not giving yourself the adequate time to learn how to trust a bias, and then moving past that to where the rubber meets the road is narrative. See, bias is rather simplistic. You arrive at that on a weekly chart. You arrive at that on a daily chart. Is the market going to go higher to an old pool of liquidity, an old relative equal high, two highs that are real close proximity to one another, and the most recent one being slightly lower than the previous? That's like king. Okay, it's where all the retail traders are going to feel real safe if they've been short, placing their stop loss just above that. So I teach you to try to reach for that. And that is simply cut and dry, as easy as you can get for a bias. Whatever time frame that exists on the relative equal highs, that's the time frame that you're bullish. Does not mean you won't have down candles. It doesn't mean you won't have down days in between where it is right now and when it gets there. But all too many times, traders see a down day when it's unlikely bullish. I'm about to list everything out the window because it probably just reversed because we had a down day closed down 150 minutes. That doesn't mean anything in today's market. I shouldn't have any, I guess, bearing on what you believe is bullish on that time frame. In fact, it's good that there's down days in higher time frame charts like that because that's how order blocks are created. The market trades above that down close candle and it comes back and touches its opening price. And then you have a change in state delivery for the short term, but it's already been bullish. You see how quickly a neophyte, someone new, can get lost in the time frames and feel like, I don't know what I'm doing. The sands of time are just carrying me here and there, and I don't know what I'm doing. Why is ICT calling it bullish? Why is he looking for it to go here? Why is he looking for it to go there? Why didn't he do this and why didn't he do that? That's what we're talking about today. Narrative. See, it's not enough to know that it's likely to go up. It's not likely to go straight up every single day when you're bullish. In fact, it's unreasonable. Unreasonable to expect. And when it can be seen far less likely that it doesn't go up. It's narrative. Out of all the books I've bought, all the authors I listen to, even people that claim to have made lots of money, even my initially, first mentor, Larry Williams, his tools, rather simplistic, but didn't really get to the core of what I was aching for was, how do I navigate this stuff? Even if I see all the things that I had grown to trust as a brand new student of his, 1895, I had to find my way through all that stuff because I would overanalyze, I would second guess, I would sprinkle this and that from everybody else that I thought I was learning good stuff from. And it wasn't helping. It wasn't helping at all. Because I didn't know the mechanics of what was going on behind the scenes with liquidity, time-based delivery. And that's the crux of what makes algorithmic price delivery what it is. It has absolutely zero to do with how many people are buying and how many people are selling. And it's silly when you think about it because you say, oh, look at the buyers. They're buying pressure. Here's how you quickly throw that into the bin, okay? You cannot get filled on a long purchase of any instrument at all unless someone took the other side of it. So there's transactions there. They're on both sides. It's funny how everybody misses the idea that it's going up. No matter how many contracts, how many shares, how many lots are trading, whatever entity state the other side doesn't matter. It's still the same buying and selling pressure at the same time. But you'll believe the books. You'll believe the authors that regurgitate everything else the books have taught. And it's funny how you're always learning and never coming to the knowledge of the truth. You're never getting there because you're believing the lies and you're drinking from the well that's tainted. If you go in looking for things that are false, not realizing what you're looking for is false, it's flawed logic. And it's easy to grow accustomed to saying, well, you know, this game is random. It's not an even distribution of buying and selling winners in my trading. I have to always be willing to see the market go into states of randomness. And that is everything's in here. Down to the tick. Proof of that is you can see it before it happens. And where it trades right to a specific level, down to the quarter point or it stops. And one has to admit, either the world collectively is listening to little old me, a nobody from Middle River, Maryland, and they're all marching to the beat and drum, the Pied Piper playing, and they're buying, they're selling, they're stopping exactly where I said that level should be sensitive. Or, and this is the truth of what it is, the market should break. And they're set to that level by algorithmic price level. It doesn't matter. All of a sudden, nobody wants to buy above that tick high. No one wants to sell below the tick when it's been dropping, right where we say it's going to go to. Isn't that odd? Isn't it odd? Okay, look at your level 2 data, those that believe it. But there's still orders above these levels. Why aren't they getting tagged? Because they're not part of the party, folks. They're not being invited. You're just left outside. The 501 Club, the people that are in the mix right now, they're in there. They're moving and shaking. They're in there. They have been ushered in to the highest place right now. That's the volatility in the marketplace right now. They're in there. And you always have people that are outside waiting for somebody to get tired and go home. So they can allow them by fire code to let more people into the party. They're trying to usher in. Hey, look, bro. Please let me slip in. I'm at my quota. I can't let by in. Think about it like that. Why aren't these moves getting that 1/4 tick past it when there's 300 buyers? 300, 500, just beyond where we said it's going to go. And it says, can't come in. See, you've never went into the marketplace looking like that. You never investigated those things like that because the books never told you to think that. Just like when you go to school, they don't teach you how to be an entrepreneur. They don't teach you how to be your own business person and pay less taxes. Get paid. You're going in ill-equipped, ill-informed, uneducated, and I'm raising my hand right now because that's exactly how I started too as a 20-year-old. In 1992, I absolutely had no idea what I was doing. Zero. And scared. And every time I went in and I was buying, I really didn't know what I was doing. I was very anxious. I could not afford to lose any money. And the times that I was wrong, I didn't understand how the market was going to come back and take the sell stops. Anyway. I'm thinking, okay, I'm going to wait for it. Yeah. That was the finding my way actually to understand the concept of a narrative. Because I was a perpetual fool. Not because that's better than anything else. Not because Larry Williams said so. Not because anybody else I was reading the book from said it's just the only way to make money to go wrong. Remember, I was trading commodities, grains, cattle, lean, live hogs. Think about it. Those markets are not just like straight up or straight down. They're all over the place. They have real supply and demand factors associated with them. Not like equities, not like index futures, not even like currencies. That's artificial. But the world's grocery store, commodities, they have a real value. They're always going to have value. They're never going to zero. Bitcoin can go to zero. Cattle prices will never go to zero. Everybody has their cheap trick. Okay? Sometimes it's big. But narrative tells you as the trader, is it really the right time to be buying when my bias is bullish? And narrative is the definition of how that time frame that you're looking at is going to deliver to whatever target you arrive at in your analysis. Case in point would be this. Let's assume for a moment you're bullish on NASDAQ. Okay? And you look at the weekly chart and you feel like, okay, it's going to go higher. And I think it's going to go up 600 to 700 handles from where it is at present. I'm not saying that's the case for right now. I'm saying hypothetical. Because I know you're probably listening to it on somebody else's YouTube. And there's no reference to time. Okay? So don't listen to this thinking I'm applying it to present market conditions at the time you're looking at it in the charts. It's a pattern. Hypothetically speaking, assume that you have several hundred handles that you think NASDAQ is going to deliver to over the course of 1 or 2, 3, maybe 4 weeks of time. So you're going to submit yourself to 4 weeks of time for that target to be delivered to. There's a relative equal highs up there. There's a fair value gap, something other than balance. There's your reason for going up there. I think that's not the most important thing. The important thing is, now that you arrive at that bullish bias, how will every single daily candle paint? How will price book on the daily chart? Where will it open be? How will it close that day? How will it close between Monday and Friday? Where's the low from? How much can it move for that particular and still be bullish, but not deliver it all in one shot? See, these are all questions you have to have, kind of like a checklist. Now, I used to have a checklist. It used to be a long, like a pre-flight list of things I would worry about. And I shared it before. And you're going to ask for it right now. And I'm sure somebody that has collected everything ICT has it and will probably share it. That's okay, let them do it. It's fine. But it's as simple as this. Every session, that is the London Open, that is the Asian session. All of those Asian sessions have perspective. Also have their own time-based range, where there is what it's going to do in that segment of time. And they're like puzzle pieces. Think about it like this. Anyone that does jigsaws, and I love jigsaw puzzles. I'm a problem solver. I've always invested in puzzles, and I've collected jigsaw puzzles since I was a young guy. And the more pieces there are, the more I love it. And anybody that's ever done anything with jigsaw puzzle knows that you gather all the smooth edges, those pieces first. Doesn't that sound similar? Doesn't it have echoes to something I've already been teaching? Find it where it's smooth, okay? And then when you get all those smooth pieces, what are you doing? You're making the border. The furthest extreme of whatever that image is that makes that jigsaw puzzle is a you build that border first, and then start working your way in. That's the secret to a jigsaw puzzle. You find all the border pieces first and work your way in. Well, when I teach you read price action, what do I tell you to look for? Smooth. Look where it's smooth in price, because that's where it's going to disrupt it. And here's the wonderful thing. That occurs